Welcome to Explain the Charts, everyone. Today, September 17th, 2025, we're cutting through the noise to bring you an in-depth analysis of QQQ, the Nasdaq 100 ETF, by examining both the latest news and its corresponding chart data. The market has been a whirlwind, with the major indexes, including the Nasdaq, recently hitting record highs around September 9th, driven by palpable optimism for a Federal Reserve rate cut. This sentiment was initially fueled by revised payroll data indicating weaker-than-expected U.S. job growth, suggesting an economic cooling that could prompt the Fed to ease policy later this year. However, the narrative isn't uniform. Just a few days later, we saw the Nasdaq leading stock declines as traders began to pare back those very rate-cut bets. New economic data, particularly the ISM non-manufacturing PMI, highlighted persistent inflation pressures and a resilient labor market, making the inflation fight seem far from over. This conflicting information creates a fascinating backdrop for our chart analysis, where we can observe these dynamics play out in price. Looking at the daily chart for QQQ, showing all available data, you can clearly see the significant uptrend that has characterized much of the past year, despite periodic pullbacks. Notice the strong rally phases, like the one from late 2024 extending into mid-2025, reflecting periods of strong growth and investor confidence. Conversely, we identify notable drops, such as the one in April 2025, which can often be linked to shifts in economic outlook or specific sector-related news. These downturns often correlate with news suggesting higher-for-longer interest rates or concerns about economic slowdowns. Let's zoom into a crucial period on the daily chart, specifically from April to August 2025, to highlight some key reversals and support areas. The dramatic drop around early April, where QQQ plummeted from near 470 down to the low 400s, was a significant event, likely tied to a sudden shift in market sentiment or unexpected economic data at the time. This area around 402 to 422 acted as a strong support zone, with prices quickly rebounding, demonstrating robust buying interest at those levels. Similarly, the subsequent rally that took QQQ back towards the 500s and eventually towards our current levels near 590 underscores the resilience of the tech sector and underlying bullish pressure. The news about Nasdaq's own initiatives, such as the CFTC market oversight modernization and partnerships with AWS to enhance market operations, serve as long-term tailwinds, bolstering the structural integrity and growth potential of the exchange itself. While not directly influencing daily swings, these strategic moves contribute to a positive long-term outlook for the index. Now, let's shift our focus to the one-hour chart, looking at the recent price action from late August to early September 2025. Here, we see a clearer picture of the volatility surrounding those conflicting rate cut expectations. Notice the steady climb in late August, followed by the pronounced dip around September 5th. This dip likely reflects the market's reaction to the hawkish shift in rate cut bets we discussed earlier, with strong selling pressure pushing prices lower. The hourly candles show rapid changes, often with increased volume during these moves, indicating active participation from traders reacting to real-time news and data. The level around 560 acted as a temporary support after the September 5th decline, showing buyers stepping in to prevent further immediate losses. However, the subsequent upward momentum was met with resistance around the 575 to 578 range, preventing a full recovery in the short term, illustrating the tug-of-war between bullish and bearish forces. Moving to the 15-minute chart, let's analyze the very recent activity from September 15th to September 16th, 2025, to pinpoint intraday movements and potential short-term trading opportunities. On September 15th, QQQ generally trended upwards, breaking past minor resistance levels, indicating strong intraday buying. We can observe consistent volume during this ascent, validating the bullish push. The price found initial support around 586.20 and steadily climbed towards 591.50, demonstrating clear upward momentum within the day. However, as we moved into September 16th, the price action became more constrained, oscillating between approximately 591 and 593. This tighter range, especially during the latter half of the day, suggests a period of consolidation or indecision, with neither buyers nor sellers taking firm control. The relatively lower volume compared to the previous day's climb could imply that strong convictions are currently lacking for a significant breakout. For short-term traders, the levels of 590.50 as intraday support and 591.80 to 592.00 as immediate resistance are critical watch points. A clear breach of either with conviction could signal the next short-term direction. Returning to our daily chart to summarize, the overall trend for QQQ remains broadly bullish long-term, driven by technological innovation and the potential for eventual Fed easing. Key short-term resistance is currently forming around the 592 to 594 level, representing recent highs that need to be decisively broken for continued upward momentum. Immediate support can be found in the 586 to 588 range, stemming from recent consolidation, with stronger support at the 570 to 575 level if a deeper pullback occurs. Reasons to be bullish include Nasdaq's strong structural growth, ongoing AI advancements despite individual stock volatility, and the persistent anticipation of future rate cuts. On the bearish side, sticky inflation and a resilient labor market could keep the Fed hawkish for longer, leading to further downside pressure and potential retests of lower support levels. Specific company news, like the recent NVIDIA plummet or Palantir downgrade, can also create headwinds for the tech-heavy index. Our unbiased prediction suggests a 55% likelihood of QQQ breaking above 594 and targeting new highs in the short to medium term. This scenario is highly reinforced by clearer signals of impending Fed rate cuts, consistently improving inflation data, and strong quarterly earnings from major tech constituents. Conversely, there's a 45% chance of a pullback to test the 570 to 575 support zone if upcoming CPI and PPI reports show persistent inflation, or if the Fed maintains a more hawkish stance than expected. Traders should closely watch for volume confirmation on any breakouts or breakdowns from current levels. Keep an eye on upcoming economic data releases, particularly inflation reports and Federal Reserve statements, as these will be primary drivers for QQQ's direction. Also, monitor earnings reports from key Nasdaq components and any further updates on Nasdaq's 24-hour trading plans, which could significantly impact market liquidity and participation. Remember, informed trading decisions come from understanding both the macro landscape and the micro movements of the charts. Thank you for joining Explain the Charts, and we'll see you in the next one.